I'm Christy Casciano.
I'm Jeff Kulikowski. Another very rough day on Wall Street today. We had an early indicator when the international stock markets took sharp dips this morning, and that's that panic around the world. The U.S. economy was slowing. The wave ended up washing over Wall Street again. The Dow Jones, take a look at the numbers, dropping over 1,000 points today. The Nasdaq nosediving about 576, and the S&P 500 sinks 160 points. Rick Reagan is in early now to help us try to make sense of what this all means, this recent rough ride.
There were a bunch of reasons for the sell-off we have seen since August has started, but the big ones, well, some of them are going to sound familiar, and the biggest thing is there's now talk about recession again. We worried about it all last year, no problems, but when we got a bad unemployment number on Friday, the markets really started to worry, and part of the reason is markets think the Federal Reserve is late to the ball game. I do too. So the Fed has not lowered rates yet. The market seems to think they should have started doing that earlier. And because of that, we might end up in a recession. Some other smaller reasons we saw the pullback, technology stocks. They had been on a roll for about a year and a half. They were priced for perfection. They reported earnings over the past couple weeks, which were okay, but not perfect. Hence, tech really started to sell off. And of course, there's concerns about what is going on over in the Middle East. But for now, I think it's these three that are the big reasons that we are seeing the sell-off. But it's not all bad news. Part of the thing is we got bad unemployment numbers, yeah, but the unemployment rate is still historically really low. So the unemployment numbers, while worse than we expected, put in a historical sense, are still pretty good. And if they continue to weaken, one of the good things is the Federal Reserve, they've got a lot of dry powder. What I mean by that is they've got the ability, if they need to quickly lower rates, to start buying bonds. So I think they can provide a lot of support to the market that can help keep us out of a recession. And then finally, normally I don't say this is a positive, but the federal government is running really big deficits. They are putting money into the economy. A lot of the Infrastructure Act, the CHIPS bill, the Inflation Reduction Act, a lot of that money has yet to hit the economy. I think put together, this stuff will help us avoid a recession, but there's no doubt about it. Markets are much edgier than they were before, and everybody is going to be watching what happens for the remainder of the week.